All right. Good morning, traders. I just had the weirdest thing. I started a live stream that was like the wrong one, and I was talking to myself and I was so confused. But now we're here together. It's Monday morning, August 30th. My name is Charles, and this is the Pirate Traders live stream. All right, guys. So, the overnight basically just balanced to slightly higher prices over the weekend, which is extremely bullish. If those of you remember on Friday, basically what happens was we had this first thing in the morning, the market spent a little bit of time grinding around. And then right as the Fed chair began to speak, the market had a massive push higher. And then it just continued to stay up in this upper range throughout the rest of the day. And that was a sign to us of acceptance of these higher prices. Okay, it meant that the market didn't really need to pull back down. It was happy to stay up here last week. Now, that doesn't mean that it can't pull back down now, but that is a really important signal. When there's a fundamental change in the market, meaning, the latest information coming out from the Fed, and then the market pushes higher and stays higher, it's just a sign that new information is accepted and the market is going to continue its trend higher, going to continue to make new all-time highs. So it's bullish. Okay. That in combination with the fact that the overnight traded up in this area, the upper end of that range, once again, didn't really need to pull back at all, and found a lot of support above the note of volume where Friday traded. All of that is just very bullish, once again, of acceptance of these higher prices. Now, that doesn't mean we have to have a day today where the market pushes even higher and makes new all-time highs. We could rotate around here, and we might even need to pull back in to yesterday's range and just create a little bit of stronger support in here where we have these weak references. But all in all, it is pretty bullish to see that the overnight stayed up here. Okay, market opens in 1 minute. It's going to open with a gap, so gap rules are in play. Essentially, what the gap rules tell us is that the market will likely try. Okay, overnight inventory is, more net long than short. So they're going to try to pull back down and fill the gap, getting to yesterday's high at 45.10. If they're able to get to that high, okay, then we look for support at that level, right? Does the market find support around yesterday's high? It doesn't have to be exactly at it, but will it find support right there? Again, to me, because of the overnight trade, because so much volume and time was spent in here just below that high, I do assume that that's what would happen, that the gap would fill, it'd pull down, it'd do some rotating around in here, and then it'd be ready to trade higher. If that happens, that is bullish, okay? And I'd want to go long with that. If the gap fails to fill, if it tries to trade down and it can't get to yesterday's high, that is the most bullish scenario. That is what we call a gap and go. So the market will generally just keep going in that direction. And then the third scenario would be the market trades down to the gap and it does not find support in there or just below and continues to trade lower. Okay, that would be a look above and fail of yesterday's range and increase the odds we need a little more of a pullback. So I'd be looking, there's a note of volume right in here where the POC was. You could get some support in there. So like 45.06-ish, that area. If not there, the repair of these weak references. So we got 45.03 and 45.02. We got some weakness there. So the market might need to trade down to there, build some support before it can continue higher. If those levels fail, the next target to the downside is the weak E period low that we left behind at 44.96. And if it gets much lower than that, we're probably going to need to backfill some of these single prints that we left behind. So then if we got into that area, so if we got below the 44.96 level, I would be looking to target the base of the single prints as support, okay? So all in all, I would say I'm very bullish on this, but let's just take it one step at a time. First step, do they fill the gap? So far, they have not. This is looking like a gap and go. Remember that when you open outside of the previous day's range, so here we're opening above the previous day's range, you don't necessarily get chopped. Sometimes the market just picks a direction and goes. And the most bullish scenario is a gap and go. We do have bad taper at the low, though, increasing the odds we'll need to trade back down here once again. But it doesn't mean that the market needs to spend, a half an hour grinding around. It'll try to fill the gap, And as soon as it realizes it either can't or it gets to yesterday's high and finds support, it can turn around and start heading straight up again. All right. Lamus, good morning to you. Good to see you. R.K. Leon is here. Good morning to you. Marco, good morning. Yes, I agree. Today is a day to make some money, baby. Let's do it. Let's do it to it. Rad is here. Good to see you. Ronald, good morning. JL99, good to see you as well. Welcome. Okay, so Ronald says volume makes it look like there's going to be another slow grinder to the upside from the latest support areas. 10 to 15 points, if that. Let's wait and see. If these markets have taught us anything, it's that there is tons of exuberant buyers out there who, once they have some confidence that the market is pushing higher, they will just pile on. So today is really one of those days where anything could happen. We could get rotation up here at higher prices where the market goes nowhere. We could get the rocket ship trend higher if we get a good gap and go this morning. And, in a worst case scenario, the market might need to pull back to repair some of this excess that it created on Friday. So any of those three scenarios is, possible. And we'll just take it one step at a time, right? The very first thing we worry about is the gap. Do they fill it? Do we find support at yesterday's high? If not, we start to ask the questions, do we need to repair this? Once we do we find support there? And so on and so forth. Okay. Okay, good taper on the high here. Doesn't mean it'll be the high of the day, but just that if it was, it would be a good high. And they're heading on down to fill that gap. Shubaho Deep, good morning to you. Welcome. Jason, good morning to you. Tom is back with us. Good morning to you. Fausto is here. Good to see you, brother. Tom, what is my gap fill? Yeah, so we always consider the previous day's high in the futures contracts. That is the gap to fill. Brian, good morning. More new highs on the way. Already did it. Did it first thing. Market was like, nope, we're not leaving that overnight high. We're going to make a new high here. And they did it right away. Let's jump over and take a look at the Q, see if they had a gap on there as well. Yep, so right now, gap and go on the Q as well. Once again, bad taper on the low, increasing the odds they might need to trade back down here and put in some more two-sided trade. But for the moment, that is bullish as a gap and go. Herman, good morning to you. Amir, good to see you. Trading Donkey, good morning to you. It's a great point, Donkey, on the longer-term trend line. Let's take a look at the daily and see where that's at. Oops, that's 1 hour. So yeah, we're butting right up against a trend line on the daily. Of course, breaking that trend would be bullish, especially if it came back down and found support there. But potential resistance until that happens. Okay, internal starting to pull down below that zero line. It's not bearish yet, but it is a sign that the market might need to fully fill that gap before it's ready to bring in good support. Arthur, good morning to you. Rick and Bobby, shake and bake. Shake and bake. Shake and bake. Miles says maybe this is a look above and fail. It's possible. But like I said, for me, what really stands out as the most bullish thing that I feel this morning is the fact that our market on Friday didn't pull back at all. It was just grinding higher all day long. So you can see it was like, this was the push higher at the very beginning of the Fed, talking. And then it kind of bounced around for an hour after that. And then it pushed higher. And I was almost sure up here in this H and I period, I was almost sure that that was the high of the day. And we were going to get a massive pullback to try to backfill some of these single prints because this was such an emotional move higher. So I was almost certain that that was going to happen, but they didn't. They just stayed up here. So time regulates the market. So if time kept the market up here, time was saying, this is the fair price to do business. This is a good, we don't need to go back. And then volume measures the success or failure of that. So when I zoom out and I look at the day and I see that the most volume was traded up at these higher prices, that to me is just very bullish. So I don't suspect the market needs to pull back down below this here today, but we'll have to wait and see. They did leave some weak references behind. So okay, it's looking like a gap and go at the moment. Let's go back and look at the internals. Yeah, I wouldn't be ready to jump into a long until they got the ticks above that zero line once again. Leighton, good morning to you. Raj, good to see you. Marco, 30 points right in the open. Congrats, brother. That's a great day. Design Knob, good to see you. Welcome. Shubaho Deep seems the pullback to fill is done. That's why I said we got to keep an eye on those internals. The fact that they were staying below that zero line, even as the market was trading back up to here, is a sign that's probably more short covering, right? It's these traders from the overnight who went short in here, right? They're just, when they got that gap and go this morning and the market started pushing higher, they just got nervous and started exiting their trades. So we haven't quite brought in new buyers yet. And so likely we'll have to trade down to yesterday's high to start doing that. Stan, good to see you, brother. Yes, if everyone would please press the like button. That little thumbs up really makes a difference for me and for the algorithm. Just trying to build back up support after taking a few weeks off here. So the more likes, the better. And I appreciate you guys for doing it. Ronald, price action is boss. No, I don't agree with that. I look at the market as a two-way auction process. So price is just an advertising mechanism. It's just a trick to fool traders into going long or going short. What really matters is time and volume. What happens with time and volume? Do they correspond with price action? That's just the way I look at markets. Jose, good morning to you. Okay, so now as they're pushing back down towards the gap, let's look back at those internals. Let's see what the ticks are doing. Still not quite getting above the zero line. There you go, Marco. Just change that one word, price action, and you got it. John, good morning to you. Good to see you. Oh, for sure. Yeah. No, I agree with that, Ronald. And to be fair, I guess volume and time is part of price action. It's all kind of the same thing. But yeah, the internals, they can give you false signals, particularly in the first like half an hour to hour of the day. A lot of times they have to absorb the moves from the overnight in the very beginning. So they kind of give a funky signal. It's usually better to wait like a half an hour before you really start paying attention to the internals. Or putting too much weight on them, I mean. So Marco says little resistance to the upside. Then I might be looking for the counter auction to be done and play the long side. That is 100% the way I'm looking at the market. So I wouldn't try to short it if it does pull below yesterday's high. I would not go short just because there's so much support in here, with the repair of these weak references. And like I said, with the amount of time we spent up here on Friday, this to me is not a good short because you don't really know where it's going to find support. But waiting for it to get down there and then seeing that it's finding support, that would be very bullish for continuation to the upside. So I 100% concur. So Charles, what would get you bearish? What would get you going short on this market? That would be not finding support somewhere around this weak E period low. I would go short to try to get down here and repair these single prints. But that's just about the only thing because I don't want to fight the trend. The trend of the market overall is clearly up. There's no question about it. And the acceptance of these higher prices on Friday and over the weekend just increase the odds that the trend remains intact, that the momentum traders are still in charge. And so I don't want to fight them, not until I'm certain. Yeah, it's a great question, Marco. Would I change to two tick increments since the market is getting more volatility? And the answer is no. And I'll tell you why. Because I used to be on two ticks. When I first learned from Dalton last year, he was on two ticks and I was on that. And then when the volatility slowed down, he switched back to one tick. So I was like, oh, great. I'll switch back to one tick. Yeah, there you go, donkey. I was like, okay, I'll switch back to one tick. And that switch from two tick increments to one tick increments was very difficult for me. There was like a good 2 or 3 weeks where I was lost looking at these charts. The market wasn't moving the way I was used to. I was getting way too caught up on the amount of volatility I was seeing and worrying about it. And so I basically just decided from that point on, I'm just going to stick with one tick. You know, if the markets get really volatile, maybe I'll switch to two. But I'd rather just stick with one and kind of remind myself that there's more volatility than normal. But just because, you know, your brain is a process recognition machine, and that's how I trade the profile, is by my brain just knows what it's seeing. I can just kind of feel, ooh, this is bullish, this is bearish, you know, they're this is fast tempo, this is slow tempo. Those type of indicators, they go based off of feel. And so as soon as you switch to two ticks, that feel is gone and you have to kind of redevelop it. And so just to avoid that, I don't do it. But I remember when I took classes with Dalton, one of his colleagues, this guy named Raj, he stayed in one tick for the exact same reason. So I don't think there's anything wrong with staying in one tick. The real sign will be one time framing, right? If we start noticing over and over again that we get cessation of one time framing by like 1 or 2 ticks and the market keeps trending higher, I think it happened like once, but if that keeps happening over and over again, then that will be the sign that it's time to switch to 2 tick increments. All right, well, they're bringing in the buyers. They're almost back above the zero line. So again, the most bullish scenario when you have a gap is the market not needing to fill the gap and just pushing straight higher. So if this does get some continuation to the upside, that is the most bullish scenario. Got good taper on the low. Pavel, good morning to you. Welcome. All right, guys. Well, I'm feeling bullish. So far, this is a gap and go. Internals showed us that the market was able to bring in more buyers here with the ticks. So the only thing that would take me out of my bullish stance was if the market traded back down and then got below this node of volume from the overnight. Pulling back down, we can still find support around yesterday's high and then continue higher and still use this sort of opening 30 minutes as a signal that the market is bullish. Fair enough, Fausto. You know me, I'm just looking at it as a two-way auction process. They auctioned the price down and the buyers stepped in. Gimme, gimme, gimme. They wanted it. They only had to let it go a few more ticks lower and they would have brought in bigger, more longer term players, but they didn't even need to. So now those bigger, longer term players are going to have to start piling in up here. Nasdaq looking strong as well. For me, looking at this now, any little pullback here should start to find support right around that opening price. You got the half back, you got this node of volume, and the overnight high kind of all in here. So this should act as support on a pullback for continuation higher. No, Shubaho Deep, that is not something that I look at. What I am talking about with you guys is literally all I'm looking at here. You're looking at my screen. I've got this screen that you can see and my cell phone where I'm reading your comments. Other than that, this is it. I'm just watching the two-way auction process. I watched the way they pushed higher. I watched the way they pushed lower. I watched how they made great taper on the low at the same time that they brought in buyers on the ticks. So now I know that the momentum is to the upside. And in 1 minute, we'll print the B period. I assume we'll get a little bit of a pullback somewhere in the B period here. But if we find support, I will assume that that trend is going to remain intact. And yeah, that's all I need to look at. Okay, so we created a poor high here in the B period, increasing the odds the market will need to push away. So if it finds support in these nodes of volume down here, we'll probably get continuation higher. If it starts to get below, say, the opening price or this little node of volume right below, so say it gets below like 45.12, then we're looking at a potential pull back down into yesterday's range. But as long as it stays above that opening price, I think we're good for continuation higher. Shubaho Deep. Ideally, we should one time frame higher through the end of the stream. Yeah, let's wait and see. Yeah, Arthur, it was a well-timed entry. All right, well, we are one time framing right into Donkey's trend line. So can the market push through that? Remember, a big part of why this happens the way it does with gap and goes is there would have been a lot of people waiting to enter here, right? There would have been a lot of people who were sitting around waiting for that gap to fill because there's really, really high probability. Gaps almost always fill. So those people, the more time that we spend up here, eventually are going to have to give up and enter at higher prices. They're not going to take no trades all day. If they're bullish and they want to go long, eventually they're going to do it. So the more time we spend pushing up here like this, the more of those players that start to step in. There you go, donkey. Yeah, I mean, this right here in this moment, because those ticks are getting below the zero line, feels a little bit more like some FOMO, some short covering. But yeah, I mean, you get one more pullback. This little node of volume gets thicker and thicker, and the new buyers start to step in. It's true. Actually, now that you write it as one time framing.exe, it would actually be a really easy one to make an algorithm for. To just, if you always buy in, say, like within a couple ticks of the low, so you're never risking more than like a point, you could probably make an algorithm to do that and just run on its own all day, every day. Something to think about. Be a fun one to back test as well. Yeah, see, Design Knob, this is my thing now. Is I'm done letting like the market pushing higher on weak, like weak support. So yesterday, I'm sorry, Friday, we had all this excess that we created with the single prints. We have all these weak references, and for the last year and a half, when I've been seeing stuff like this, I've been like, I don't understand. How can they keep pushing it higher? Look at all this weakness. But I'm finally come to the realization that, like, no, this is what the market does now. It pushes higher and higher and higher on weakness and weakness and weakness. And then we have a massive pullback, that takes 2 days at the most, instantly V-shapes, shoots right back up and makes new highs. It's like we used to have to repair this type of weakness instantly before we were ready to move higher. Now we're happy to go way higher and then come back down with a massive pullback, repair everything, and then a massive V-shaped recovery. Like, that's just what the market does now. Will it do it forever? No, of course not. But right now, that's what the market's been doing for the last year and a half. Why do I assume today is the day it's going to come to an end? Why not just accept that, like, this is what the market does? It gets itself way too overexcited, gets itself too much exuberance, and then it only takes a day or two to take it all back. And then we go right back to FOMO and exuberance. I am CT. Thank you for the sub, my friend. Good to have you. That's a great point, Ronald. The more money that the world prints, the more inflation that we have, the less valuable each dollar becomes. But the companies, they don't change value. It's not like if we print more money, less people are going to use Google Maps. It's not like if we print more money, less people are going to go to the grocery store. So the companies, businesses, the value of the business stays the same no matter what happens with inflation. But the dollar value of them goes up because the value of an individual dollar goes down. Like I said on Friday, a few years ago, it was crazy to imagine a single company worth $1 trillion. Now we got half a dozen of them. Why is it so absurd to assume that a few years from now we'll have a couple dozen more? All right, let's pop over and look at those internals. So they're still struggling to get above the zero line. That is not what we would normally see on a gap and go type of day. What we would see is a trend that each candlestick would be a little bit higher and they'd be pushing their way up towards the upper end of the ticks here. So this is a sign that the market is running out of buyers here. Might need to pull back down towards that open to bring in some more. MK, bad start to a week for you? Well, then shake it off, my friend. Each trade is its own opportunity. Past trades have no effect on future trades. So if you're feeling the stress, it's time to walk away from the computer. Give yourself a little half-hour break. Come back with a fresh mind. The next trade can easily make back the money you lost on the last one. Yeah, John, and there's psychology to back that up. It makes sense, right? When your mind starts to get stressed, it releases hormones. It releases the fight or flight chemicals. And the way that those chemicals work, the way they're supposed to work, is they shut off your higher thinking. They shut off the part of your brain that thinks logically and processes information. And it literally just limits you to like very simple decisions, which is like fight or flight, right? So if you're trading, what is fight or flight? Well, fight is I'm going to get in another trade and I'm going to make back my money right now. God damn it, market, you're going to give me back my money I lost. And flight is like I'm too scared to enter. And then you miss trades, right? So when you're feeling that stress, the absolute best thing you can do is to just step away, calm down, let those chemicals work their way out of your brain, which is most easily done by just thinking about other stuff. Distract yourself, Watch some TV, read a book, go for a walk in a park. Like just let your brain unwind the stress. And then when you're calm again, it will literally function better for decision-making purposes. Yeah, nothing wrong with that, MK. Just paper trade. You can do it on TradingView. If you just go in and sign up for a free account, they'll give you a paper trading account and you can do it for free. You don't get access to the futures. I think you have to pay for that, but you could trade like the, SPY or whatever. And just practice your skills. I don't think there's anything wrong with that. Yeah, okay, Leon. That I wouldn't recommend front running them, but watching so very closely. Today, I tell you, it gave us a gorgeous, beautiful, perfect signal that it didn't need to fill that gap because it pulled down and then it pushed all the way back up to its high. And as it was pushing its way back up to its high, the tick was still pulling down below zero line. So that made us go, okay, we don't want to go long here. And then the next pullback, when it pulled back down to the lows, not only did it make good taper, but at that point, the ticks turned around and pushed back above the zero line. So you don't necessarily have to front run the gap, but you have to be diligent to the reality of, oh, it doesn't need to fill. Every time it tries to fill, it brings in more buyers. That's just the way I look at it. Shubaho Deep, do people trade the Dow futures as SPX and NQ? Yeah, of course. There's lots of people that trade the Dow. It doesn't have anywhere near the volume that the S&P does. I mean, the ES futures contract is the most liquid day-to-day traded contract on Earth. So sure, there's always people trading the Dow. Again, these ticks, this is not what a market looks like on a gap and go on these internals. So this does feel like some FOMO. But remember all those trend lines we talked about, like on the daily, if they get above it and then pull back down and find support, that can bring in bigger term players. Right, so we're barely above it now, that trend line. So if they come back down and they find support at that trend, that could bring in more players looking for this sort of parabolic move to continue over the next few days. Of course, too early to say. That's a daily candle, but worth keeping in mind. Shubo Deep. Yep. You put it out there into the universe and it happened. Yeah, there you go. So now we've started a trend higher and we're above the zero line. So can they keep going with this? If they can, they can push the market higher. Hearts and minds are being changed. Keep in mind, super low volume. Here, let me zoom in a little bit so you guys can see it better. So really low volume here, 200 contracts. Another one with 200 contracts. So market at some point probably going to need to pull in here, but that will likely be a buyable dip wherever they find support. Should those ticks continue to trend higher on here. Yes, sir, Brian. A little bit of a pullback is definitely needed at some point here. They're getting real thin with the volume. Also, we know as of late that this market loves to just trend one direction to the B period and then reverse the other way in the C period. So we're going to assume that the one time framing will continue, but we'll be keeping a close eye on that as well. RB out. Sweet, bro. It's a good day. JT, do they call it the reversal hour? I've never heard of it referred to that way. Okay, so yeah, all these single prints that we left behind here now increase the odds of needing to be backfilled. If that were to happen, it will set us up for a great one-time framing trade when we get down into this node of volume around 17. Create a little poor high here in the C period, so we're likely to get a push away. All right, guys. Well, with that, I will bid you all farewell. Thank you so much for joining me. 84 people watching us here today. 47 likes. I appreciate those thumbs up. They really help out the channel. And I look forward to seeing you all here tomorrow morning as well. If you're not a member of the Brigade, there's a link in the description. You can join us. It's $10 a month. You can cancel anytime you want. And you get to stick with me for the rest of the trading day. If you're already a member of the Brigade, give me about 5 minutes, and then I should have that stream up and running. Thanks, guys. Have a great rest of your day.